thank you very much. It's very nice to be here. Just one question before I start. In order to know the technicity of the audience, can I just ask if you can raise your hand if you know what an order book is? Okay, so relatively technical. Good. So there was a glitch in the metric, and I prepared relatively technical slides for a 1-hour keynote. And then this morning I realized it's not 1 hour, it's 15 minutes, and the audience may be not as technical as expected. So I'll try to, I assume most of you knows about, if you know about order book, you know about trading, you know about crypto, you know about data. So I will skip the parts that are a little bit low level and focus on what I hope to be interesting for you. So today we're going to be talking about cryptocurrency market intelligence, i.e. data, and what kind of data is available and generated and created by blockchain and how we can use it. So agenda for today, again, sorry, I thought I had an hour, so I'll go quick on what is not relevant. But basically, as you know, data is the fuel for most financial products and services, and you need comprehensive and accurate data in order to operate and make decisions and invest and trade. But you also need accurate data to build product, right? So I'll talk a bit about Kaiko very briefly and what we do. I'll talk about the different types of blockchain data, the type of data that is available on-chain, and then the difference between centralized exchange data and decentralized exchange data and how we can learn from one for the other. I had a Q&A session that I don't think we'll have time to. Just a few words about Kaiko. So Kaiko is a global company. We have offices in New York, London, Paris, Singapore, and Hong Kong. We're about 100 people. And what we do is those 4 things here: market data, historical and real time, covering all centralized exchange. So that's where you get data such as order book data or real-time tick data, all of that financial information that is generated on trading venues such as Coinbase, Gemini, etc. We also have all of the DeFi data. I'll talk about that in a second. We have a regulated entity that publishes rates and indices. We have a quant analytics division where we create data products such as implied volatility surfaces, value at risk models, and more quantitative type of data. And then we have our research arm, and our research arm is basically how we show the relevance and the importance of data to the industry. We're regulated, audited, etc. This is the type of data that we do: market data, centralized exchange data, DEX data, DeFi data, all bunch of things on analytics and indices. It's pretty technical, and who we work with is mostly financial institutions, financial terminals, and large crypto corporates. So we work with banks, we work with asset managers, we work with hedge funds. We work increasingly with regulators because regulators need access to financial market data in order to understand trading volumes across the board, across the different exchanges, on-chain. We work also with financial terminals, so companies that you may have heard of, like Bloomberg, they have a terminal on which you can have crypto data. It comes from us. For those of you who use Messari, we provide the market data to Messari for them to display on their terminal. So we do also that data visualization component. That's just a very high-level view of what we do, which is that we're connected to pretty much all places that generate market data on the centralized side, all of the centralized cryptocurrency exchanges, but also all of the DeFi protocols. In order to get data from a centralized market, you generally have an API that is open to which you can connect to. In order to get data from DeFi, and I'll spend a few slides talking about that, it's completely different. You need to run a blockchain infrastructure, you need to get data from blocks, you need to understand, organize events, and give them meaning in order to transform that into understandable data. So we do both centralized market data, DeFi data. We create a bunch of products, and then we expose that data to the industry, either through the internet or through terminals, again, such as Bloomberg or Messari. And we also work with oracles in order to deliver data directly on-chain to smart contracts. So this is about Kaiko, what we do. We're headquartered in France, but we have offices globally. Right, so this is maybe going to be a little bit basic for some of you, but it's important to say that there's different types of data that is related to blockchain. I guess the 2 main separation of data types is data that is generated off-chain, meaning that is related to blockchain information, but it does not live inside the blockchain. And then you have on-chain data. So on-chain data is data that has to do with events and transactions that is carried out directly on the blockchain, whereas off-chain data is when you basically have a transaction that happens outside of the blockchain. For example, if I trade on an exchange, if I buy a Bitcoin on Coinbase, this does not happen on-chain. This, I have to trust a third party, i.e. Coinbase in that case, to process the transaction for me. Very often, those ended up being netted on the blockchain at some point, but my individual transaction does not happen on-chain, and thereby the data associated with my transaction or with my trade does not live on-chain. Oops, I can't click anymore. Did I? Sorry, the clicker is not. Yeah. Cool. I'll skip on that because I think it's a little bit too much text for everybody here, and I think based on what the raised hands we had earlier, you know what on-chain transactions are, but it's basically when I transfer a Bitcoin on-chain, this transaction is visible on-chain. Off-chain, it means that basically you trust a centralized third party to execute your transaction, and generally those centralized third party offer data APIs and data products that are available for users. So when you see, for example, things like the price chart of Bitcoin in dollars, this is a price chart that is built by taking all of the price transactions of the exchange rates at which people are trading Bitcoin on exchanges. So focus on-chain data. There's 3 types of on-chain data. What we call off-chain data, just to close on the off-chain data part, most of the financial market data available off-chain is generated by cryptocurrency exchanges, where still today the large volume and majority of trading volume takes place. Now, if we think about blockchain data, there's 3 types of data. The first level of data is data about the network itself. So this is data types such as hash rate, mining difficulty, number of transactions per block. This really is data that is, it's called network data because it's data about the network. And it gives a lot of indications, but it is really kind of first layer of information about a specific blockchain. The second level of data or typology of data is wallet data, right? Wallet data is I take a blockchain, let's say Bitcoin, and I look at flows between wallets. For each of those sections, by the way, there are data companies that are experts in providing that kind of data. For the first one, network data, there's a company called Coinmetrics. They provide metrics about network data. You probably have heard about them. This is typically what they do. Wallet data is another type of data that has to do mostly with monitoring flows between wallets on chain and seeing the type of activity. And that is things that companies like Elliptic or Chainalysis does. It's studying a given blockchain and looking at the flows between wallets. Data about applications built on the blockchain is a third type of data. This is what we specialize on, especially in the context of financial applications. So DeFi protocols are applications built on the blockchain. Lending and borrowing protocols are applications built on the blockchain. They also generate their own data, and this is generally financial data because they're financial applications. And so we collect that data. We're experts in that third type of data. And so market data in DeFi are data types such as what volume is traded on DEXs, how much is lent or borrowed on a daily basis in DeFi, how many addresses hold different protocol token, and how is that split across the different DeFi applications. It can be useful in order to do a couple of things, right? One of them could be find the best investment opportunities. Knowing about the borrow rate across lending and borrowing protocols is important because that's how you know where it's cheapest to borrow. Understanding the concentration of liquidity in a DEX is important. Just checking out which DEX or which centralized exchange offers the best price for trading an asset is also an important data type. So this is about investment decision support. This is about also what we do when we provide DeFi data to regulators, being able to understand block data, segment the data, label the data, and the users of any given DeFi protocol is also very important. So it helps the data helps everybody, but here it's the specific example of regulators, understand the uses of DeFi, make recommendation, and help institutions navigate the space. Another one is to identify early on potential attacks. There's something called just-in-time liquidity, which basically is something important to monitor when you trade on-chain. And here the idea is to capture a bunch of transaction fees and kind of anticipate moves on DeFi protocols. Another thing you can do is anticipate crisis situations. Sometimes you can see events taking place and shaping up on-chain before they actually happen on traditional exchanges. A very known example now is what happened with UST last year, where there was a liquidity crisis on DeFi because there's a lot of sellers of UST. It made the price drop on decentralized protocols. And then a couple of days later, we had a centralized exchange liquidity crunch, and then everything kind of started collapsing. So this is really kind of highlighting the importance of looking at the data that happens on chain, where things are automated, things happen faster, and you can generate some alpha even though you're not necessarily using DeFi yourself. Monitoring the data there is extremely important. You can also anticipate market move, understand project token economics, understand the level of decentralization of governance tokens, understand how various project tokens are split between the different holders. I will stop here. I had something comparing CeFi and DeFi, but it's getting a little bit technical. So I'll leave you on that first overview of what market data is about. But I'm more than happy to share the slides, including the next ones, for anyone who's interested. Thank you very much.